Hindustan Unilever or HUL reported a 7.7% rise in net profit to 2,474 crore rupees during the December quarter, beating street estimates. With 5% volume growth, the FMCG major's revenue grew 16% to 15,343 crore rupees. However, most of HUL's revenue expansion was price-led, not demand-driven. In its near-term outlook, HUL CFO Ritesh Tiwari said the company would be cautiously optimistic if commodity prices remained where they were. However, he cautioned that year-on-year inflation was still high and HUL expected growth to be price-led. The results brought a modicum of positive news for the FMCG sector and the overall economy. HUL, whose performance is seen as a proxy for broader consumer sentiment, said the slowdown in rural India was bottoming out. It added that the worst of inflation was likely over. Taken together, these developments would set the stage for a revival in volume growth. MD and CEO Sanjeev Mehta said demand had recovered both year-on-year and sequentially, particularly in rural areas. Citing Nielsen data, the company said while the rural FMCG market grew 4.8% in value during the December quarter, volumes fell 6.6%. However, this was still an improvement from June and July, when the market had declined 2% and 1% in value terms. Mehta said HUL was seeing green shoots, given that the FMCG market in rural areas had started improving. However, he cautioned that it was too early to declare victory and that while the situation was improving, there was still a long way before volumes and rural markets would turn positive. According to data from Bizum, demand from rural areas showed signs of recovery in December, declining 0.2% on a month-on-month basis compared to the 17% month-on-month decline seen in November. Akshay D'Souza, Chief of Growth and Insights at Bizum, told Business Standard that rural demand was almost on a growth path, adding if inflation continued to soften for some more time, it could spur strong consumption in rural areas. Rural demand has been under stress since August 2021. Companies were forced to increase prices and consumption was hit as a result. FMCG firms also had to cut the grammage of their packs to pass on some of the impact of high commodity prices. In 2022, high prices ate more into rural earnings than urban. A combination of factors, from the war in Europe to weather, impacted rural India. But the end of the year did bring some improvement in the situation. A Kotak Institutional Securities analysis revealed that real rural wage growth was negative for a 10th straight month in September 2022. The contraction was largely on account of elevated inflation. In rural areas, retail inflation has been consistently above the 6% mark since January 2022. Combined rural and urban retail inflation for the month of September surged to a 5-month high of 7.4%, before moderating to 5.88% in November. In December, inflation eased marginally to 5.7%, staying within the Reserve Bank's tolerance range of 2 to 6%. At 6.05%, rural inflation was higher than the 5.39% in urban areas. Higher rural inflation than urban throughout 2022 meant that people in rural India were affected more by high prices than their urban counterparts. Now, HUL sees the rural slump bottoming out. Against this backdrop, what do experts have to say about the economy of rural India and its consumption?
I think the rural demand is improving a little bit. I think one of the reasons is that the harvests have been good, and we also see the rural wages picking up a bit. I think the speed is still very low. And on top of that, I think inflation in general has come down a bit. So all these are generally positive for private consumption demand. And I think from a farmer's perspective, the good harvest and slightly higher staple prices, particularly rice, wheat, etc., I think these add to their incomes. So there is some movement in rural demand, but don't forget, next in the coming fiscal year, we're looking at a slowdown. How sustainable it is, I think, will need to be seen.
Your inflation numbers have been higher in the rural areas, which means that the real purchasing power has come down. The second part is that there have been certain crops which have been affected in terms of their kharif output during this particular season. So part of farmer income has also been affected. And the third part is that we have seen that the SMEs, which are located in rural area, I think around half of the rural economy actually comprises non-farm income. That is something which is still struggling to get back on its feet. So given these conditions, I think that the pace of recovery in terms of rural demand will tend to be very gradual, impeded along the way by higher rural inflation.
So, rural consumption, as per me, is expected to see a volume recovery in the upcoming months, and this will be majorly because of improved rural demand and lower inflation. Now we are seeing that the input prices is also stabilized, so we don't foresee the price hike in FMCG products in future. So that is also one of the reasons.
Given that consumption is the principal pillar of the economy, what can the budget do to support it in rural areas and for the larger rural economy?
I think the Manrega scheme should be kept as a safety net. I think if there is stress in the rural area, then it could be deployed. But in general, I would say more infrastructure creation is the only way out for sustained rural improvement and also improvement in demand. So maybe more allocations to rural infrastructure, etc. Housing particularly. I think these are the ones. These are activities, particularly housing, which involves construction, labor-intensive activities, so it will provide jobs as well. So I think that's the route that I think budget will take.
See, the government cannot, in my mind, do anything decisively on the consumption part. But what it can do is to continue with the kind of support which has been provided to the rural economies. This has been done primarily through the NREGA program, which has been done through the PM Kisan scheme, where there have been cash transfers which have been given to the rural folks, something which will be helping to spur consumption. Now, to my mind, given the kind of limited space which is there in the budget, the government may not be in a position to increase these amounts substantially. So therefore, while there will be some kind of maintenance of government support in the form of these transfers, there may not be any kind of substantial increase because of the limited fiscal space which is there.
Consumption is expected to weaken in the second half of FY23, and economists expect this slowdown to continue into FY24. Given how important a broad-based recovery in consumption is to reviving the investment cycle, the government may have to provide some support to rural India in Budget 2023, despite its limited fiscal space.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.